Hello and welcome to an Ichimoku analysis of ESG on the Australian Stock Exchange. We're looking at the daily chart. We see that price tried to jump into the cloud way back here, wasn't able to without red there, came back down, tested this blue. Red's finally in the cloud, price came into the cloud. We've managed to finally break out of the cloud. Good clear breakout is once this brown line is out as well. Lines are in position, bang, went up, came back down, tested it, and we've gone into bull trending. Mind you, this is back in November. March I thought was the low, so this stock has been trending nicely throughout this bull run, and then we've hit this test recently. Now I'll bring that in a little bit closer, and it's relevant because this is sort of what the SPY is doing currently. It is coming down and using the daily cloud as support. We see that on the lowest point where it was down in that 71 cents, it came down and touched 70 cents. Now price has come back up, tested the top of the cloud, couldn't come out because red's back down here. It's come down and greeted red, and that's where we find both the lines currently. Now that's when I start looking back candles. 1, 2, 3, 4, 5, 6, 7, 8, 9. So tomorrow we get rid of that one. We still have the low in place. The day after we lose that low and it comes up to here. The day after we come up to here. That brings the red line back up into this area, and that gives the price a chance to go back out this way. Brown line currently underneath the candles. Blue is resistance. You've got 84 cents there as resistance. Once you can break through that 84 cents, you're back up on top of the candles. If you can get back on top of these and you're into this area, you're back to bull trending once these lines come out of here. We'll have a quick look at the weekly because that tells the story of why you've been confused lately. It's just a funny part of Ichimoku, and it's why I follow it, because it does manage to explain the extraordinary. You've broken out through the cloud in the weekly back here in March. So when it turned and we had the bottom and we've started the rally, this was ready to punch out of the weekly cloud, and it did so. It came back down here. See how it greeted red? It punched out without red. Red came back down and did it. Now you've been bull trending. It hasn't greeted this blue line. At any sense of danger or weakness, price retreats to that next level of support. We've gone down and touched it. That's a positive sign, because now we've satisfied everything to go into bull trending on the weekly chart. The future cloud has turned bull, and that hasn't been touched, but you've got to wait all these weeks before price can even get over there to touch it. But these lines will now start moving upwards if price can get back above the 83 cent level. So 83 cents is crucial on ESG. Once you move back past through that, you'll find that price is breaking back out of the daily cloud and you're back into bull trending on the weekly and on the daily. Quickly, we will try and go to the monthly just so that we see that we've got the next level of resistance, and we see that price is above the cloud on the monthly, and I've already had a look on the quarterly. It's above the cloud there. So once you punch back out of this, then you have no resistance above except for, I believe, this old high. So you're now trying to get back above the 2008 level, and you've tested it once on that breakout, and now once price comes back up over that 92 cent level, you've got two bars that are above the old high, and then you can start looking at breaking that resistance and turning it into support. Good luck with the trade.